Welcome to HURDCO International School Grade 8 online class for Combined Business Studies. Our today's topic is terms used in accounting. This video tutorial will focus on how to solve the questions given at the end of your lecture paper, Chapter 9, Terms Used in Accounting. Let's look at the first question that asks for capital expenditure, question number A2. Remember, capital expenditure is the expenditure on non-current asset which is going to last with the business for more than a year of time. Thus, any rented building, rented transport, or any bill paid on that rented building is not counted as non-current asset because that might be changed within the course of the year. Thus, in this question, we will be only counting the fittings and other decorative items that the business purchased, a computer that the business purchased for its own use. Thus, we get a total capital expenditure of 100,000 plus 50,000 equivalent to 150,000. I repeat again, any expenditure made on rented items is not counted as non-current asset. We are taking the fittings and computer here because the business purchased them. The business owns them. The next question asks about revenue expenditure. We know revenue expenditure is any expenditure for revenue generating, and this must be paid within 1 year of time. Let me clarify what is revenue. This is nothing but the earning of the producer by selling the goods. Thus, any item, any expenditure directly linked to production of the good is counted in the revenue expenditure. The salary of the staff, truck fare. We are assuming this is a rented truck, showroom rent, electricity bill for that rented showroom, telephone bill for that rented showroom. All these added together gives us revenue expenditure of 22,500. To clarify again, all these expenditures are incurred because we are producing particular goods. If our business goods change, our business strategy change, these costs will also change. Thus, all these costs are directly linked to the production of goods by the business and counted as revenue expenditure only. Question B2 asks to calculate account payable. We know this is any amount that we are supposed to pay others. For example, you purchased raw materials from the wholesaler and you did not have the whole amount of money with you that time. So you promised to pay the rest of the amount within the next 6 months or so. Remember, account payable is a form of liability which is short-term liability and must be paid within a year. Thus, in this case, from the passage, the business bought 150 fidget spinner for 1,000 each and 60 Lego sets for 12,000 each. Out of the total, it has already paid 800,000 in check. So, the due amount is 70,000 recorded as account payable. The second part of the question asks for liability. Remember, liability is any amount you owe to others, but in this case, we will be counting both the amount due in the short run, that is within a year, and in the long run, that is more than a year. Thus, under liability, we have the account payable plus the bank loan taken initially, that is 70,000 plus 220,000, giving us a total of 290,000. Remember, liability is any amount you owe to others. Last question was about account receivable. That means the money you are supposed to receive. Maybe you sold goods to customers on credit. That is what we call credit sale. And they are supposed to pay you back. Remember from the passage, the producer sold 9 Nerf guns, 10 Beyblades and few video game packs for 55,000 plus 4 3D game series for 45,000 to a certain customer, and this person promised to pay him back within certain time. Thus, his total account receivable, or the amount of money that the business is supposed to receive, is 100,000. Hope the video was useful in clarifying your confusions in accounting in CBS. For further clarification and queries, please attend Zoom classes after the vacation and stay connected. Thank you for watching.